Hello, it's Mr. Intermarket Analysis. Okay, so the European close is in, and just having a look at the FTSE 100 for Tuesday's trading, the 26th of November. Okay, so basically, let's see what happened today. Okay, so we still have this inverted head and shoulders pattern. Okay, so bear that in mind. You've got a falling, expanding wedge pattern. Which generally, according to Mr. Bolowski, is generally a bullish continuation pattern overall. Again, it's technical analysis. From my perspective, if it's being respected, especially the upper channel, then always keep a neutral bias and allow fundamentals and intermarket analysis to dictate which way it's going to go. Okay. But from my perspective at present, the way in which I'm observing this, basically, we seem to be holding previous resistance equal support at this level here, which was 6660. Okay, we've seemed to have created a right shoulder, okay, on the daily chart. But let me just go over the fundamentals. So basically what happened overnight, you had Chinese dispute versus Japan, geopolitics, that obviously hurt China, hence the reason why the Chinese market was down overnight, although the Nikkei was higher, given the fact that the yen is being burnt. Okay. Basically they got immense amounts of Kool-Aid, etc, money printing, and obviously that's encouraging the carry trade. That's why USD JPY and Euro JPY are skyrocketing. Okay, so that's certainly a factor there. Okay, and that's obviously helping the Yanks or the American markets to remain aloft and remain high because of the carry trade. Okay, so provided USD JPY and Euro JPY continues to romp higher, expect the US markets to romp higher and expect the FTSE to move in tandem as well. Now we did expect the commodities to get hit hard, but they haven't been hit as hard as everybody expected. Yes, I agree, oil is down. Obviously I had a bullish setup on oil going in to the weekend, but obviously given the Iranian situation, the Iranian deal, etc., that obviously that is not the catalyst that we were looking for. Remember the setup that I gave on oil, if you go back, I said we need a fundamental catalyst to propel this higher, a geopolitical crisis. So obviously the Iranian deal hasn't provided that. Although, again, I must stress that the Israelis are not happy with the deal, and if they decide to strike themselves, then it's a real concern. Okay, although Mr. Obama was speaking to Mr. Netanyahu, who's a bit of a warmonger really, and he was trying to calm him down. So, okay, well that's the reason. That's one of the hard. That's why commodities, or should I say oil in particular, is very hard to trade because it's very vulnerable to exogenous variable events. Okay. So the news flow can come suddenly, quickly, and it's impossible for a trader to even account for that and adjust it accordingly. So that's why I focus on equities, or should I say indices and forex. Okay, and whereas commodities, I tend to swing trade those, which hopefully I'll be starting to share those trades as well from January onwards on my fundamental analysis service. Okay, so going back to the FTSE itself, obviously the commodities were hit, hence the reason why I had a bullish bias in the morning. I shorted the FTSE, managed to get plus 20 on that with subscribers on the live analysis service. We had a cracking day today, absolute cracking, 81 points for the day today, so today was a fantastic day. Okay, so yes, so obviously China was down, so hence the reason why I had a bearish bias. I had a bearish setup on the Euro USD, which I've shared with a lot of people on Twitter. If anybody wants that, then certainly feel free to email me. If you go to my, you can email me at daytrader@inter-market-analysis.com, and I'll send you my Euro USD short setup that I send to subscribers in real time, which I always share my trades in real time. Okay, so yeah, the Euro USD short was good, plus 25 of the first 2/3 and plus 40 of the last 2/3, and I managed to get to plus 21 on the short DAX, plus 20 on the short FTSE. And then I managed to get the Nasdaq and the CAC. I decided to close, and certainly made another plus 15 on there. So overall, good day. Like I said, cracking day. Okay, so let's have a look at the FTSE itself. Okay, so now that we've covered the fundamentals, China down, obviously that put pressure on the FTSE initially. Eventually, the FTSE managed to close in the green and certainly pushed higher for the day because of the Iranian deal being perceived as being bullish because of the reduced friction and tension in the region. Okay. And given the fact that commodities obviously have been hit hard anyway prior to that, it's certainly a catalyst there now for a short squeeze. Okay, so now let's look at a daily chart. So basically you've got two support levels. You've got support level 1, which is at 6630, and you've got support level 2, which is at 6660. Okay, we're creating this inverted head and shoulders pattern. We've got a downward sloping or a downward expanding wedge pattern, which I've already explained is a potential bullish situation. Once we break out of it, we trigger the IHS. The IHS target is obviously the last previous high, and that's given the fact that we've got light volume, etc., etc. Very easy, okay, very easy for us to achieve and attain and hit that level. Okay, now let's have a look at the FTSE 250, which I always like to look at, given the fact that it's a small cap stock and it sort of reinforces the FTSE's view. Okay, so yes, look at that move. Okay, quite a fantastic move. Okay, so that's one of the reasons why I closed my short position at 85, 86, or was it 84? Can't remember now. Basically plus 20, so that's one of the main reasons. Anyway, I managed to get a good average because the FTSE went as high as 6, 7, 10 in the morning. Managed to get a good average there, and yeah, so I think we went as low as 83 or 82. I can't remember. So I averaged out anyway. So but that's basically one of the reasons why I exited for short position with plus 44 to 20, and I was content because I realized that that support level was holding and was being respected as well. Okay, so this channel here where we've held this trend line, which I've already explained yesterday's video, once we break and push higher, we break out this bearish channel, then we go back and retest 15,700, which again will be the catalyst for the FTSE to trigger off the IHS formation and hit the 6,870 level, I think it was, on the IHS target. Okay, so certainly obviously map that on your own charts there, and keep an eye on that level. Now let's go to the micro time frame. Okay, so where are we, folks? Where are we? Okay, so FTSE 100. So basically I've already explained that there's an inverted head and shoulders pattern, so there's multiple inverted head and shoulders patterns. So number one, we've broken out the bearish channel, inverted head and shoulders pattern. We've retested the same channel, so previous resistance equals support. Now we've created the head. We're holding the Fibonacci retracement, okay, of 75% for the right shoulder. Provided it stays over 75%, is all lights are go, all lights are green. Okay, so inverted head and shoulders and inverted head and shoulders, two inverted head and shoulders pattern. Going higher will be inevitable, especially given the fact that we've got light volume. So I expect this FTSE certainly to move higher up to the 6780 level and the 6820 level going in the coming days. Okay, so watch out for those two patterns, especially when you get two inverted head and shoulders patterns. It's very, very potent, very powerful, and the move certainly plays. There's a higher probability of the move playing out. Okay, right. Okay, let's have a look at the 10-minute chart. Okay, 10-minute chart. See then. Okay, so the best short, the best level to short in the morning was 6, 7, 10. Obviously, I couldn't. I shorted it a bit too early, to be honest. I started shorting at 6,696 with subscribers overnight. Obviously, I managed to get, I think, average around 6,804, was it? 6,704, 6,703, around that region. And obviously, we touched a low of around 6,683 as well. So, yeah, overall, it was a good trade. Overall, it was a good trade. Okay, so basically, the short trade was good. Okay, so basically, at the moment, we've got this bearish channel. Do we break out of it? That's the question. Okay, I expect to break certainly anyway. Okay, so obviously we've got the unfilled gap below now, so there's unfilled gap at 6,670 now, 6,673, and also you've got the unfilled gap down here, which is 6,630. Okay, so there's two levels that you need to watch out for. The unfilled gap higher is the one I've already mentioned last night, was 6,725. That's the one that I expect to close, especially given the fact that copper, gold, oil are holding their own and remaining bullish and strong. Okay, so even given the Iranian news. Okay, so certainly looking for a move higher, probably possibly back to 6, 7, 10. If not, okay, we close the gap at 6, 7, 2, 5. Once we get to 6, 7, 2, 5, I'll have to reassess and reassess and see exactly where this market wants to go next. Okay, so that's certainly a level that we watch out and we keep an eye out for. Okay, so it's all about the commodities. That's basically what it all comes down to. Let's just show you the chart of the FTSE 250. Quickly chart this for you. Okay, so drawing my gap levels here. So obviously you've got an unfilled gap below, which you've left behind. Which is it justified? Yes, it is to a large extent, given the fact that the Iranian situation, obviously the Iranian news propelled this higher. Although, like I said in the morning, it didn't justify it, given the fact that the FTSE opened up at 6, 7, 10 region. And you can certainly argue that we've broken this channel and we can certainly look to go higher. Okay. But my only concern will be the unfilled gap. It's quite a substantial gap, so we just need to keep an eye on that. We also have an unfilled gap up here, which works out to around the 15,380 level, yeah, around that region. So we certainly need to go ahead and close that gap. Okay, so let's see how this goes. Okay, folks, so I think that's a wrap up now. Risk on, risk off, wax on, wax off. Take care. Goodbye.